Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my new November investment. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been very good. Since we recovered the number of views and hours viewed for the month of August. Unfortunately, I have fallen far short of meeting my goal of having 500 subscribers at the beginning of November. Even so, I will not be discouraged and will continue trying to upload content of the best quality possible. For this month, the goal will be to reach 550 subscribers before the beginning of December. The evolution of the investment made in October has not been good, since it has fallen by around 5.5%. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term, so this large drop does not worry me too much since I fully trust my estimates of the intrinsic value of Comcast, and as you can see, this month Texas Roadhouse has almost reached $100 per share, which is near my cost basics. The good news is that during this month Comcast has distributed a gross dividend of 29 cents per share, which after taxes and the euro to dollar exchange rate on October 26th has given us 70 cents or 74 cents. Moving on, I currently have 23 stocks from different sectors on my watch list, but for today's video we will only focus on those that are below my estimate of their intrinsic value. Because remember, you always have to buy low and sell high, and not the other way around. As simple as it may seem, most investors lose their money by not following this advice and selling their shares when the price has already fallen and panic and buying them when everyone is talking about them and the price is overbought. Additionally, we will not consider companies in the consumer discretionary and communication services sectors to diversify our portfolio and reduce risk. And also, like the previous month, we will wait until the next month to make the investment in REITs for a couple of months until the evolution of interest rates is downward. So we will go on to analyze in-depth companies such as Texas Instruments, Kroger, Qualcomm and Cisco Systems, since they are 4 companies that have an upcoming ex-dividend and some of them will allow us to receive dividends this month again. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company from 1 to 100. Let's start by checking the dividend safety. All 4 companies show great results, although Kroger's is slightly lower. Continuing with the dividend growth of recent years, the panorama changes quite a bit since Kroger has had a growth of 12%, Texas Instruments is somewhat lower at around 4.8%, and unfortunately Cisco's barely reaches 2.6%. Finally, we see how the 4 companies have a very similar dividend yield, around 3%. Regarding the evolution of income, profits and free cash flow, the best companies are once again Kroger and Qualcomm, as we can see in the following picture. Gradually both companies are moving away from the other 2 companies in terms of score. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to our fair value analysis. All 4 companies are below the 5-year average, indicating an undervaluation of their respective prices. Kroger is almost 20% below the average P/E ratio of the last 5 years. Texas Instruments is 25% below, and finally Qualcomm and Cisco are close to 2% below. Impressive, right? Moving on to yield on cost, here Texas Instruments is the clear winner with over 30% compound annual growth rate over the last 10 years, while the other 3 companies barely managed to reach between 7% and 16%. Finally, we will see the total return that each stock has offered over the last 5 years. To obtain a score of 100 in this section, 10% per year will be taken into account. With 2 companies, Texas Instruments and Qualcomm, have managed to exceed the 60% that marks that 10% annual profitability as you see in the graph. However, Kroger and Cisco have achieved a total profitability during the last 5 years of less than 60%. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Texas Instruments is the one that has obtained the highest score, due to Kroger's low safety coefficient. So Texas Instruments will be our November pick, although we'll also consider Kroger next month, along with other potential companies. Then we enter the scalable broker and carry out the operation, looking for the TXN ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. But this month it will be a little bit higher due to a sharp drop during the last month's. By introducing 1 shares we would make an investment of 132.58, so adding the commission of 99 cents, the investment amounts to €133.57. I would like to emphasize that I made the purchase on October 30th, after the sharp fall of TXN below $140, and today it has already reached above $150. Well, we go on to write down the purchase made in our Google spreadsheet. We place the ticker in the first column, 1 share, and at the price of 133.57, then we multiply it by the euro/dollar exchange rate to a total of $140.90. We added it in the tech sector, and as you can see, this investment will allow us to reinvest 0.04 shares annually via dividends. As we are already in the month of November, I will move on to the monthly value sheet, and in the month of November 2023 we will write the €367.42 that our investments are currently worth in the market. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month. Until next time.